Hi, welcome to the video day. It's the 26th of September. It's Monday. Today's video, going to give our updated outlook and forecast for the FX markets the week ahead. Pick out pairs which we think could offer good risk to reward trading opportunities. Got plenty of pairs to look at. We'll go over the charts in just a moment. Now, in terms of the markets, they've been highly volatile. Been very bullish of the USD recently. USD's really had a great move to the upside. I don't think the up move is over, but I do think we are going to get a correction in the short term. That correction will be a buying opportunity. As we noted in last week's video, the big bullish fundamentals behind the dollar are not going to turn around anytime soon, but a little bit overbought in the short term. There's also quite a few crosses that interest us. We've got high volatility in FX markets at the moment. A lot of traders don't like high volatility. You need to basically have high volatility, in my view, to make money, but you've got to be able to deal with it in the right way. So I'm just going to go through some tips in terms of limiting downside and obviously maximizing profit potential. Now, in terms of, just before we go and take a look at the trading opportunities, if you want to learn our trading strategy, check out all our trading techniques as well as our daily technical sentiment analysis of 14 FX pairs. All you need to do, go to the link beneath this video and you can get live access to our member center. You can also join our free mailing list, check out our Facebook page and join our Facebook group of traders if you wish. Right, let's go and take a look at the opportunities. All right, just before we go to individual currency pairs, I just want to show this chart because it's important in terms of how we view the USD, and it's showing the dollar spot index DXY, dollar against a basket of currencies, the blue line against a black line, which is leveraged funds, big speculative money like hedge funds. You can see they're very long the dollar when we came into the new year, but they shed a lot of dollar longs, haven't they? And they sold out a good few in September, just as the USD is going really strongly to the upside. Now, in terms of this, I think it's important. The dollar's had a big rise, but there isn't a massively big long spec positions. That's why I'm really looking just for a pullback rather than a major correction. I'm not looking for a trend change. Outlined it last week. I'm not going to go through it in detail this week and check last week's video, but the Fed being hawkish will support the USD, but also it's heavily supported by the fact it's the global reserve currency, and when you have big stuff in the global economy and a recession potentially coming, the dollar always does well. Okay, so let's take a look at the first of the individual pairs, which is going to be Euro USD. All right, first chart, Euro USD. I drew this chart earlier today in the member center. Price action has changed since this morning. I'm just going to go to a fresh chart in a moment, give my updated views, but just for new viewers, when we're doing our analysis, we keep the technicals very, very simple, just big levels of support and resistance, and we just use a look at volatility and momentum to back up our view. Nothing complicated. We've already got a bias from the big fundamentals and sentiment behind the charts. That's what drives the big trend. Now, in terms of, we do analysis in the morning and then we do analysis in the evening. We're going to look at price action twice a day. And we're not going to do impulsive market orders. It's always through levels. Now, just before I go to give you the updated levels of entry and stop, our view was we would get to 96. That was our first target we have. We fell back from the 102 level. We got in at 1080. We touched 96 today, so I'm going to take half away, leave the other half run. We're looking for 90. I think we're going to get a bounce in the short term. So taking some off the table, we're still in if we do run on, but I do think there's going to be a bounce, so we've lightened our position. Now, in terms of you doing this fresh, let's go to my chart. We're down around the 96 level this evening. This morning, probably saw on my chart, I was looking for a bounce to 98. I don't think we're going to bounce to 98 now. I think we're going to bounce within this outer Bollinger Band. Very often, when you come outside of an outer Bollinger Band, you get a whole candle outside, you very often come back within. I've mentioned this in previous videos. 97 then, I think if you're coming in fresh, look to sell up towards that level. Where would your stop be? Going to move our stop down this evening to behind these three bodies here. Big red defining candle, stop 98.45. Now that would give you a risk, if you get in about 97, 145 pips risk against about 700 in profit, if our views are of course correct. Okay, just if you'll get a little bit of a bounce in the short term, then lower prices. Mentioned it in my last video. It's really looking bad in Eurozone. I just want to show you just three charts here. Look at inflation, how high it is, okay? And the ECB hiking rates, they can't bring that inflation down because it's a supply side shock to do with energy, isn't it? Mostly. If we look at the energy crisis in Eurozone, that's the impact on the zone, the grey line. Blue line is the impact on the US. The US is faring better. And you've got a full-blown cost of living crisis. This is real wages, okay? Look at Eurozone, really lagging. There's plenty of charts in our weekly update about how bad it is in the zone, and it really is. Now you've got a right-wing government in Italy. That's a problem. There's going to be clashes between them and the EU. I'll just show you one more chart. This is a good chart. I've shown this one before. It comes from Corporate Nordea. They were predicting a little while ago that the euro should overshoot to the 90 level. I personally think they're right. So, in fact, we could even go lower than 90. It's that bad in the zone. So, my view in terms of Euro USD is just sell a bounce stop behind 98. See where we go. I'll look at a few other euro pairs in a moment. But the next pair I want to go to is AUD USD. Right, AUD USD, this has been a really good downtrend. We've been holding it since 70.90 and we've got to our first target, which is 65. We're now looking for a move, to 60, and I might even extend that to 55. Now this morning I thought maybe get a rally to 66. Okay, I'm not looking for that to occur now. Looking for a rally probably to the 65 level, maybe a bit above. Again, we've come outside from now to Bollinger Band. Just wait to see if we can get back within it. Okay, I wouldn't chase this one lower. If you sold into 65, which is basically the body of today and the tail over here, where would you put your stop? I'd go back behind 66, behind these two candles I'm highlighting here, where the double bottom broke with the big red. Okay, so wait for a rally. In terms of the commodity currencies, and the AUD in particular, very influenced by the Chinese yuan. I mentioned this before in videos. So USD is going up on the yuan, and that pressures the commodity currencies lower. The three currencies that are most influenced that we track are the AUD, the NZD, and the ZAR, due to the amount of trade between Australia and China. Now, in terms of this move, if we were to break 720 and continue up, that's just going to keep weighing on the commodity currencies. China's got really big problems. Economy is slowing up. It's obviously the world's biggest commodity consumer. And you can see here some further economists' views of Chinese growth slowing up. China's consumer confidence has collapsed. It really just has big problems. So AUD, see if you can sell a rally. Again, if you're a member of ours, I'd recommend taking 50% off the table and then basically putting it back in on a rally. Right, next commodity currency I want to go to, which is going to be USD CAD. Right, we're on USD CAD. In terms of this one, said last few videos, it's our favourite in terms of the USD in the majors, biggest position size. And it done well for us this morning. From 130.30 to just below 136. And I thought, I might get dipped back to this level. Monthly support level 135, okay? But we haven't dipped back. We've moved to the upside. So I just want to go to price action right now. Big, strong blue candle, basically near enough 200 pip range or a bit more than the 200 pip range. I think, again, if you're coming into this one, how would you play it? I think, yeah, if you got below 137, the round number, you could buy back through it with a stop behind 136, so say 135.60. Or if we retrace back to the outer Bollinger Band, 136 level or through it, buy on strength, stop behind 135. So what we're going to do, take 50% off, stop goes to 134.60 tonight. Now, in terms of when you take partial profits, it's good in terms of psychology, because moves, when they run aggressively like this, I'd find it hard to keep the full position on. Okay, taking half away relieves a bit of pressure, and then you can keep your stop back outside the noise. There's no point in using like a 50 pip stop or 75 pip stop in these markets. Okay, so the partial banks are good in terms of allowing you to keep your stop back, good for the psychology. And I've said it in numerous videos, you do not need big size. Okay, small size is good the way these markets are moving, and only look at price action twice a day, so you don't make impulsive trades, okay, or get sucked in to the short-term price action. I might have said that earlier. If I did, apologies, but I think it's an important point from beginners who watch price action too much. Right, let's look at just a few more dollar pairs, then we'll do some crosses. All right, just a couple more USD pairs. This is USDMXN. Now, the dollar really been strong in most, well, the pairs we've just looked at, but the MXN has really held it down. Okay, pokes through the 2020 level, had been rejected. You can see them. Now, in terms this morning, we cleared the 2020 level, and I think this one is just a buy, okay, without a pullback. Emerging markets, when the dollar gets really strong, you've got a global economic slow up, they will normally get hit hard. This one actually held the dollar down better than we expected. But now, look at her. She's gone up through the next round number, okay? Or not round number. She's gone through 2040. So I think this is a buy. And you want to just put your stop back behind these tails here I'm highlighting, just behind this body. So something like 2015, where are we going to go to? 21's on the card. You've really got to look at the monthly chart for the potential. I think 22, so these candles up here, that's a really good risk reward trade. It's a fast moving pair. We'll see if it does follow through to the upside. But there's another pair in the emerging markets I like, and I've liked this one for a while. It's USD ZAR. All right, USD ZAR. Now, in terms of the ZAR, heavily correlated, as I said earlier, with the Chinese one, and does a lot of trade with China. It's been a nice uptrend for a while. We recently got stopped out in the last video on trade when it dipped back there. We just bought it straight back. Okay, again, I think this is a buy without a pullback. Let me just show you the chart. I would buy, and I put the stop back behind these tails, so say 1778, and then I'd look for a move up to 19 or higher. So let me bring up the monthly chart. See how it's winding up on the monthly chart. I personally think it can get to this spike tail where we took the two tails over here basically. They're my dollar pairs. I did look in the last video at Euro proxies. They've all gone higher. If you're a dollar bull, it's been a really good time. The move is not over. Okay, we might get pullbacks in certain pairs, but dollar will continue to work its way higher. Now, if you let's have a look at some crosses. I'll look at some Swiss franc crosses first. Right, from Euro CHF. Now, I did a full video on the CHF, which you can check out if you wish. Basically, very bullish of the Swissy, just due to a hawkish central bank, and also it doubles as a safe haven as well. We're obviously really bearish of the euro, so Euro Swissy is kind of interesting to us. Now, in terms of, we sold that spike there, okay? So just basically off the 97 level. Now, we've got choppy candles here, red, blue back up. My own view on this one is I think it's a sell on weakness, just back through the 95 level. At this moment in time, I've just put my stop. We're not going to lose anything, okay? But if we go through 95, and we'll just have a look at where we are tonight, just going to come up, I think, navigate 96. If it fails, sell through 95. Don't worry about that tail there. And then you can see if she rolls to the downside. My view, in terms of being very bearish of the euro. I think I could go as low as 90 longer term. It's a bit of a slow burner. I mean, it's not the fastest moving pair, but longer term, I think it looks good. Also like, sorry, CAD CHF, which I've put up here. Again, we sold that spike up there. We just thought that was a bit of a short covering after a big move down. I personally think you've got to get through 72. Just go to CAD CHF. So yeah, if we get back through 72, you can sell. Okay, so just through the tails. My view would be the stop should be 73.30. So just back behind that big tail there. And then look for a move to monthly support at 70, which I'm actually going to extend down towards 65 longer term. Okay. Last CHF pair is going to be AUD CHF. Again, nice move down, got stopped out, sold the rally down. Now we're holding 64. AUD CHF. Okay, so I think it's going to be hard to take out 65. If we go through 64, we should be off to the downside. In terms of monthly target, I'm going for 60. Okay, so basically, it's near enough, 400 pips against 130, 40 risk. Just feel that, yeah, Swissy's safe haven status, we are seeing risk aversion building. It will come into play. I like these three Swissy pairs. Now, I want to finish up with a couple of JPY pairs. Right, we're on CAD JPY. Now, in terms of the JPY, it's extremely oversold. It did start to push the CAD down. Then you had this big intervention candle where the Bank of Japan intervened. I think the CAD is still overbought on the yen, or the yen is oversold, and we should go down to these big levels here. Now, in terms of how would you play this one, I'll just go to my chart here. I would come through these tails here, 104.70, or this tail here, sorry. So you're through the round number 105 to stick the stop behind 106, look for 102, then 100. If we were to bounce above 106, the high, sell back through the level, stop behind the body of the intervention candles, something like 107.20. I personally think the yen, the intervention in the yen has kind of wounded a lot of speculators who are short, and I don't think there'll be a big appetite for yen shorts. It's deeply oversold, so I'm looking for more corrective action. Last pair I want to cover is going to be EURJPY. Nice run down in this one for us. And you've got a nice blue, well, not for us, a nice blue candle coming up. I think this rally will fade. How would you play this one? EURJPY. I would basically look to sell back through the round number of the bodies, 138.70, these two tails over here. Stop behind 140. Look for 136, then 134. If we get up through 140, I'd look to sell back through the round number, and I'd put my stop behind the next round number back, which is 141, behind these candles here. So let's say 141.40. Okay, just feel, the yen, if you take it, is the most oversold major, although the British pound has probably caught it up. In terms of British pound pairs, I did have I'd had a short EURJPY trade. I got stopped out of that. In terms of right, EURJPY, and in terms of the euro, nice fall, but we're coming back this morning. I still think there's more downside, and I view the rally as a selling opportunity. Okay, so I'd be looking for 136, then 134. We're coming up to the 140 level. In terms price action, similar to this morning, didn't get to 140. I would actually sell through the bodies, or this tail here, 138.70. stop back behind 140. I go 140.40, then see if we can get down to 136 and 134. If we get up through 140, I'd look for topping action up here, sell off the round number back through it, and I'll put the stop back behind 141, the next round number, probably behind these behind these bodies here, so 141.40. So yen I just think it's got a little bit more strength. I didn't cover AUD and NZD in this video. I don't know if I said so earlier. The chart setups are similar to CAD, JPY, in the way we would play them. In terms of markets, lots of volatility. I was actually bearish of the euro on the GBP and got stopped out of that. A huge move against the GBP. I think the GBP, the selling is overdone, but I don't want to be touching pound pairs today. So I won't review any. I'll probably do it in the next few days, though, because I do think the pound, it is deeply oversold now, could bounce back. But I did think that last week, and it didn't. But overall, for us, our markets have been friendly. I'm looking for this volatility to continue. We'll see what happens, but that is the video for now. Thank you very much for watching it. Take care. Have a good day.